Hey, good day. Super excited. You're welcome to another financial trading culture series. It's really excited. And guys, I want to give you a head up on one of the trade we picked last week. A lot of time, I want you guys to know that your trading approach matters a lot and your style of trading also matters a lot. If you're a swing trader, you want to be able to make sure you stick to it. And if you are a position trader or a scalper, you want to make sure you stick to it. But the question is, which type of trader are you? You see, I was listening to an interview by one of the successful traders that I know, and he was sharing. He said that he's been trading a particular time for the past 6 years. For the past 6 years, every single time when the New York section opened, that is when you see him come on chart, and that is when he trades. And when he's coming to trade, he only trades a particular pair, just one or two pair, and that is what he's been doing for the past 6 years. And I like to let people know that if you are able to identify what works for you, you won't be able to stick to it. Now, it's going to be boring. It's going to be slow. And there was a time I posted on my Facebook the other time, I said that trading is very, very boring. And a lot of time, a lot of people said that, oh, it's all about money. If you can make money, it's not going to be boring. Yeah, it could be. You can be making money and it's boring because you're doing the same thing over and over again. And when you try to do anything outside it, you're going to definitely donate to the market. And if you don't want to do that, then you want to be strict with yourself. Okay, guys, if this is your first time you're visiting our channel, make sure you click on the subscriber button and also on the notification bell so that you'll get notified when we upload the next video. Guys, I'm pumped up about this. We took this trade last week. We saw this trade basically on the higher time frame. You guys know I'm a swing trader, and basically that's what I do. And this was posted in our community last week. NZDCHF. NZDCHF. Fantastic. Cool. So this is it. NZDCHF. It was posted last week. Okay. And it met all our trading condition and also in the session. And when you guys know, I don't trade outside the session. It's part of our rules. A lot of people trade outside it and they're making just trade what works for you. Okay, guys, back to where we are. So if you go to the monthly time frame, you will agree with me that the market has been showing. The market has been dropping for the past over 15 years, 17 years. The market has been dropping. Lower high, lower low, lower high, lower low. So the market has been dropping. So the best you can do is to look for opportunity to sell. And even if you're taking opportunity to buy, which is against the trend, you want to reduce your risk. Not because you don't like money, but because over time, when you're trading against the trend, you are exposed and you might have to go into the trade severally before you get the right position. Okay, good. So having established that, we had a retracement back up that broke this change of trend. Okay, and that means that the market has a tendency to come back to below this low, below this drop-based rally. Okay, having established that, you can see also that we have a lower high, a lower low, a lower high, and a lower low. And because the market is yet to complete its cycle, we need to see this guy drop below so that we can now take our buy from here to the top. Okay, good. And this is what we are expecting. Can the market change? Definitely, the market could change. So we have this sell trend line that was broken, and we are expecting the market to come back to the low, which I've said earlier. Okay, anywhere around this place, you're good. So if you see this, you see that the market broke this change of trend, dropped, went up, dropped, went up. So we're expecting it to drop down here. So a lot of time I always tell you, always look for what? Your lower high, your lower low, your lower high, your lower low, your lower high. That is where you're going to be looking for a sell entry. Then you hold the trade down to the extension. Okay, good. So we saw that, and when the market came up here, we saw this monthly, weekly supply. And when we saw this monthly, weekly supply, we went as far as 4 hours, which is our entry chart. Okay, so we have this stop loss on. The market cleared this level and retraced back. So this became our what? Our impulse. This became our what? Our correction. And this became our what? Our continuation. Okay, we have another break of low here. Then the market came up into this 4 hours supply. So when the market came into this 4 hour supply, we have an option to enter this trade directly here. But when I saw that, I saw a 22 pip stop loss, which is not my type. You know, I like to reduce my trade to about between 5 pips to 15 pips. So that made us to go as far as 15 minutes. Okay, we went lower because that will be the entry chart, because that is the entry chart for 4 hours. So we went to 15 minutes. And on 15 minutes, we saw the same thing we always look for. We saw the stop loss on right there, and we can see a change of trend right here. So that prompted this zone for a sell scenario. So with this, we can now hold on this sell, and we can now use that to reduce our entry from 20 something to about 7 pips stop loss. Okay, to about 7 pips stop loss. I think our own entry was about 7 pips or 8 pips. That's our entry. Okay, and you guys know one of the rules I've taught you guys is that I don't always want to enter the trade when it's against the trend. I want to go in, sorry, in the wrong section. So I have to bring in my session trading tool, which makes us to know that we are in that session. And NZD is a token, is a New York, is an Asian pair. So I want to take this trade during the Asia. So when this happened in the Asia, I knew that this was going to be what we're talking about. So what happened? We saw the move back into that zone, and the market took off. And immediately the market took off, it made a lot of sense. And as usual, I will always tell you, always look for 1 to 5. If the trade can give you 1 to 5 minimum, it's not worthy, it's not worth your money. Okay, it's not worth your money. So if you bring this up back, you can see that we're able to catch 1 to 5 risk reward, CP1, and the second one is 1 to what? 1 to 10 is what I tell the people in the group, in the community. Okay, and you always good. And the third one, which is my favorite, is you hold it till it gets to the opposing zone. So this made it to give us over 119 pips. So this is how you want to catch moves. You want to make sure the market is repeating itself over and over again. 1 to 20 is amazing. 1 to 20 means you're risking $1 to make $20. You're risking $10 to make $200. You're risking $100 to make $2,000. Okay? So what if the week has been boring and you lost 2? Now, in as much that your percentage is consistent, so you're risking 2% on your trade, or you're risking 3% on your trade, you're risking 1% on your trade, depending on the type of account you're trading. So if you're wrong 2 times, you've lost 4%. And now that it has given you 1 to 10, 1 to 20, you're back in profit. And this is how you should trade, and this is how you can be consistent. Because if you're just open to putting entry, putting sell, putting entry, guys, you're going to be missing out in a lot of such trades. Okay, so this is the trade is still currently running. Okay, you can see it's still running. It's still running. As a matter of fact, I'm expecting it to drop down. I've broken even on the first position I took, and I'm exiting the trade. I think about, I have about 526 pips to catch here. So this is how you want to capture it. This is how you want to be able to hold your trade, be consistent at it, and you're good to go. So now that you have entered the trade, you now switch it back to daily or the level you picked it up, which is weekly. Then I now hold on back. I hold it back. Okay. I think we went in on. Yeah. So you hold it back. Now this is it. This is the same trade. So I'm going to hold this trade till it comes lower or to my extension, fib extension. That's about 600. Okay, about 600, yes, 0.60. Okay, and you want to wait for it. It's not going to be convenient. It's going to be going up and down. It's going to be, it's going to be going up and down, up and down. Right now, it has come again to a flip zone. I taught you guys flip zone last week, right? Good. You have a lower high, a lower low, a lower high, a lower low. So you're expecting a flip zone right here. And on this flip zone, you go to a lower time frame and you catch such move. So what happened again? I saw the market came into a stop loss on zone, gave us this break of structure. Then I caught this move on this. So that's the latest trade, latest entry I just picked on NZDCHF. Okay, you can see the flip zone. So this is just about, it's about 5 pip stop loss. So 5 pip stop loss, once it gives me 1 to 5, I'm out of this trade. Or I take partials and I allow it to run. So this is how you want to be able to hold on your trade, grow your money, be consistent at it, and you're good to go. You guys know I don't want the video to be longer than this. I want you to just go to your chart. I've told you over and over again, don't trade against the trend. Always identify the trend. The trend is your friend. You want to see a higher low, higher high, higher low, higher high. Wait for the retracement. When the market comes here, go to your entry chart, which is your lower time frame. Look at your confirmation there. And you should, if you hit your stop loss, use your calculator, go in percentage. If it is your compounding account, go in on 5%, 20%. But when it goes against you, you know it's your compounding account. But before you want to have a compounding account, you must have experience in using the strategy. Okay. And if it is a sell, you want to look for it. It's worth it, guys. Look at. It took how many weeks? 1, 2, 3, 4, 5, 6, 7, 8. It took 8 weeks for this trade to retrace back for this continuation. And for those that took the buy here, they probably will be happy they took the buy. But guys, that's how it is. You want to be able to stick to the rules, trade the rules, make money with the rules, and the rules will pay the bills. Okay, that'll be all for this evening. My name remains Owolabi, and I'll talk to you guys soon. Cheers, guys. Bye for now.